Hey guys, welcome back to Unstockable Trading. I apologize for several days didn't upload due to schoolwork and some other stuff, but I'm back and we'll be back every day. If you like what I do, please like and subscribe and join my Discord group in the link in the description. So let's get started. What are we talking about today? I'll be talking about three things. I'll be talking about SPX, I'll take a look at Amazon, and I'll also take a look at Apple. And there's one thing that concerns me about how this market is performing right now. So what we noticed in the past few days, we have some earnings, right? Banks earnings, airline earnings, and today we have Intel earnings. So for the banks, we know they don't they beat the EPS, or some of them, but most of them missed the revenue and lower the guidance. And guess what happened? We have some nice 2 to 3% rally to the upside. When that happens, it means the financial stocks are bottomed out. So that helped the S&P go up. But for technology sectors, we are not. Yes, we are back about 40%. But since Netflix came down and now today Intel came down, I doubt this market will go even higher. So let's take a look at what happened in the past couple of days. We are in this choppy consolidation range. We are above the 10 days moving average, above the 50 days moving average, but we're still below the 200 days moving average. Yes, we try to touch inside this volatility box, but once we enter, we came back in. So in the past couple 3 days, we have a couple of hangingmans right here. That gives me a signal bearish momentum. So one thing I would like to talk about is the bound. With the bound market, let's take a look at 4/ZB. Let me move this so you can see it clearly. The expansion, let's do $100 to the right. So what we noticed with the bond market, we know we have a significant sell-off to the downside in December, starting November and then December, all the way till Christmas Eve. And with the bond market, we rally a lot to the upside. And then what happened in S&P? We had a rally from all the way from 2346 to the height of almost 2690. This is a huge, almost, I'll say, a 350 points move to the upside. And what happened to the bond market? Doesn't really come down as much. So with this being said, it is very likely that the bond is going to reverse to the upside, which means it's going to cause another panic to the S&P 500. And what's going to drive this? First of all, we have our job report coming out, our GDP next month. All type of number report coming in February. And what kind of numbers are going to be? I think they're not going to be good numbers. Why is that? Because we have about, I'll say 32, 35 days government shutdown. So those shutdown can have a significant impact on the market itself because of the bad numbers coming out. Also, we notice our China GDP have been slowing down. It's been the slowest for the first time this slow in the past 36 years, something like that. So that's another thing we need to take in consideration toward the future. So with this being said, yes, we are still holding this position, and we need to take a look at Intel, INTC, Intel after hour. I believe it went down to like 43. I think it was down like 3%. I mean not 3%, 6%. So with that being said, it is the first major chip company that has earning, and with the tariff still going on, I don't see we are going to go higher. So I'm gonna say we are going to be in this range at least for another couple days, 3 days, until we have a big major cap technology companies earning coming up next Wednesday and Thursday. So we have a Google, Amazon, Apple, Facebook all next week, 30th and the 31st. So it's going to be in this range, choppy. And then once we broke the 2600, it is a warning sign to the whole market. Once we break this, it's going to come down right here, and I'm pretty sure it's gonna form a W shape. You see how the W shape is completing? W, so it's going to happen, and then this will be a free fall to maybe the low again. So just be careful if you are loaning the market. Who will loan the market right now at this high? There was no pullback, so it's gonna happen to the downside. Now, let's take a quick look at the two major stocks on look at. One Amazon and one's Apple. Both of them show me a very nice setup towards earnings playing. So why is that? Let's take a look at Amazon. We double top right here, and right here. So this is the 200 days moving average. We rejected. So now we're here. So what's most likely going to happen in the next 2 or 3 days? I'm expecting a Friday red day tomorrow, and then until Monday, it's gonna be a red. And then Tuesday and Wednesday, we're gonna have a rally to the upside because earnings are coming. People want to buy this up, and then once that earning shows, we're gonna come to the downside. So with this being said, this is going to come back to at least right here. I'll be targeting 1580 in the long run. I mean, not in the long run, in the next couple of days. I could be wrong. We could go back to test the 1700 again, but there's no way we're going to break the 1700 before earning, because this is a major resistance at the 200 days moving average. So this going down has a higher chance of being going up. And if you notice what happened in the technology sectors, the buying volume is getting lower and lower and lower. So Amazon, I'm targeting 1600 to even 1580. Let's take a look at Apple. When Amazon comes down, it's time for get a call pre-earning. So that's something I would like to play. And for Apple, let's just draw a Fibonacci really quick. So with Apple, I want to say it is still in a downtrend, and if you look at from the January, this is still intact. So it could be, this is a nice setup to the upside, because I want to see if Apple can break 150, 157 around the 0.382 area, and then come back to retest the gap up right here at 180, which is very possible after earning. But it is what it is. It looks very bearish. However, it is still constantly waterfalling, and then it wants to be in this range. If Apple breaks the 151, it's going to come down to 145 or even to low 141. So earnings is going to have to play. But before that, this is still intact, so I'm be targeting an upside to 156, 155, around this range for a quick earnings setup. And if you like my video, please like and subscribe. I'll see you in the next video.